Good morning, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here. Now, today is September 20th, 2019, and it's a Friday. And, what I want to talk about is the Fed right now. They're going to go back to quantitative easing, but they're not going to call it quantitative easing this time. They're going to call it permanent, get the word, permanent open market operations. Now, this term, open market operations, is much more all encompassing than quantitative easing. It can be any form of stimulus to try to prop up the markets. And it's open ended, it's permanent open market operations. This is nothing more, nothing less, eventually, it's signed the end of fiat currencies. That's what it's done. It's signed it off, the end of fiat currencies. Because that's where this is going to lead ultimately in the end, is the devaluation of the fiat currencies to the point where people finally in the end lose confidence in the purchasing power of these fiat currencies. And then what happens is people try to spend their money as fast as they get it. And this is a runaway train. And it ultimately leads to a hyperinflation. But how long will it take to get there? It's going to take a little while. We're going to start with inflation. It's going to ease its way into hyperinflation. Let's get started. Let's open up the charts right here and take a look. The Fed will restart quantitative easing in November. And this is how they'll do it. They're going to rename it. But it's more than quantitative easing. Quantitative easing was more restrictive. And it didn't give them the opportunity to just about cover everything. With this new thing, POMO, POMO, permanent open market operations, they can cover every base. They're not so restricted in what they can do with this. Gives them a lot more room to print new dollars and put them out there everywhere. Basically, it's unsterilized monetization of the fiat monetary system. And it's going to lead to them printing as many dollars in the end. They're just going to have to keep printing more and more to keep covering all the bases. As things start to go down, as things start to sink, like Germany starts to sink, and United Kingdom starts to sink into recession, and Germany, I believe, is already in recession, and the Chinese economy is starting to sink. These central banks are going to have to go more and more. Now, going over to Europe and looking at Europe, we see this exact same thing. They're open on the end of their new quantitative easing program. They've basically said, well, we're just going to do it as long and as much as we have to. It's all over for fiat. The handwriting's on the wall. It's all over for fiat. It's just a matter of time now at this point. So what's going to step in to take the place of fiat? Because, fiat is what we use as currency. It's what we use to trade, work, and labor, and goods and services. We have to have a monetary system. Something's going to have to step in and take its place. If fiat is on its way out now, and this is what this signals to me, nothing more, nothing less. Well, let's take a look at the silver price today. Hint, hint, what's going to take its place? Hint, hint. There's only 3 asset classes that people can have that are going to take the place of fiat. And that's gold, silver, and crypto. Well, they're much better anyway, They're only going to go up in value, while fiat over the next few years continues to be eroded until the point it's worthless. And that's what always happens with fiat currencies. They're non-sustainable, But gold and silver and crypto, you're going to see this stuff just go off the charts in what it's worth. How can you price? These guys that put price targets on gold, silver, and crypto, the price targets are in fiat. If you're going into a hyperinflation, how can you put any price target on it? What you really need to look at is, how much can you purchase with gold, silver, and crypto? Well, that's going to go up and up and up, how much you can purchase with it. But in terms of fiat, it's very difficult if fiat is going through a deterioration and a hyperinflation. You can't really put a price target. I mean, $1 million for an ounce of silver is not unreasonable if the dollar is going into hyperinflation. Okay, so what we got today in silver is we got 2 pennies up so far. 1777 bid, 1787 ask, which I think personally it's still extremely undervalued compared to where it's going in the end, you know. Let's take a look at gold. 1502 bid, 1503 ask. It's up $3.30 on the day. Let's take a look at cryptocurrency today, and cryptocurrency's been in this holding pattern, you know. It's a little bit higher than it was. It was riding in around the $260 billion range. Now it's moved up into the $270 billion range, $271.1 billion, with a Bitcoin dominance of 67.6%. What I like to see is the Bitcoin dominance has fell back from around 70% to 67.6%. This means that the altcoins are showing a bit more strength. This is a bullish signal to me, but we haven't moved up in price yet. Now, we had somebody come along and manipulate. This is my opinion only. But I think we had somebody come along and manipulate the market in the last 48 hours. And they dumped a whole bunch of Bitcoin, and then they bought them back. I think it was the same player. And so we see this flash crash sort of a deal, you know. It's probably the same player sold and bought back in. He's probably got 10 more Bitcoin or 15 more Bitcoin now. He probably used 200 or 300 Bitcoin or whatever, you know, however many he used, dumped them into the market and then bought them back. You know, it's just sort of playing around these guys are doing, you know, to enrich themselves. It's been the same way with the silver and gold manipulation for the longest time now. They manipulate the markets. Big players, whales, are able to manipulate the market to their own benefit and make a lot of money. You know, let's take a look now today at the Dow Jones Industrial Average. I'm going to have to refresh the page to see what she's doing. She's up 30 points today at the market open, 27,124 points. And, you know, here's another thing. If they're moving into these massive stimulus programs, the United States, that are open-ended, they're never going to end, permanent open market operations, new name for quantitative easing, if they continue to print dollars like it's going out of style, and they never stop, and they just keep increasing printing these dollars, moving us toward a hyperinflation, there's no end to how high they can pump this market. It's unlimited how high the market can go, but it'll be priced in dollars that can buy less and less and less and less and less. So the market really is not, in terms of purchasing power, the market is really not purchasing more. All it's doing is going up in dollars that are being worth less and less and less. So the purchasing power of the market can actually be dropping as the market is actually going up. So the market can be going up in value, but what you can purchase with that money that's stored in the market is going down in value. If that makes sense to you guys. But that's what can happen during a hyperinflation. Now let's take a look at crude oil prices. Up 43 cents on the day, 0.74%. $58.56 today. Let's take a look at U.S. Treasuries. Treasuries, we see the short end of the yield curve. Let me pull the charts in here so we can see a little bit better. Get the charts so we can see the whole thing. Okay, so the middle end of the yield curve, we got rising yields, and on the long end of the yield curve, we got falling yields, and on the short end of the yield curve, we got falling yields. But the movement, as of yet, is not real big. The biggest movement looks here is on the 1 month. We look like they're falling 3.5 basis points on the 1 month. But all the rest of the movement here is small. It's not real big movement yet today. On the bonds and treasuries. Now let's take a look at the US dollar index today. And we're looking at it slowly going up today. It's at 98.55. Now, you know what? 97 is the mark, US dollar index at 97, where it's difficult for these emerging markets and the amount of money that they've borrowed in dollars. It makes it difficult for them to pay back their loans, basically, you know, if the dollar is too strong. And anything over 97 on the US dollar index, and they're finding difficulty. So we're above that. We're at 98.55, which is difficult for the emerging markets. Let's take a look now at the well, we've covered that. Listen, thank you guys for listening to this show. Give me a thumbs up. You guys have a great weekend. I'm going to do a show this weekend, probably on Sunday, you know. And we'll see you guys probably next week. And you guys have a great weekend and have some fun out there. And don't forget the thumbs up. I really need those thumbs up. Bye-bye, guys.